Hello friends, this is CMA Bhanu Prakash, Director of Finsharp Global Academy. For best quality training for professional courses like CA, CMA, CMA, ACCA and CMA US, get in touch with us. Hello friends, today let us talk about the concept of subsidiary books. The concept and its advantages we'll look into. See, as part of financial accounting, what do you do? What is the first step? Journal means whatever transactions happen, you will record them systematically through the debit and credit rules in a book known as journal. Now, whatever transactions happen, if you record in a single book, single journal book, later on analysis and posting them in the respective ledgers will become difficult. Instead of recording all the transactions in one single journal book, we can maintain a separate book for separate type of transactions. What all types of transactions can be there as part of accounting? Maybe purchases, sales, that too purchase for cash and credit. Sales also can happen for cash or credit, paying rent, paying salaries. So different type of transactions can be there. If you record all transactions in one single journal, it will be difficult for you to later on analyze wherever purchase is there. You have to analyze and post in purchase account. Wherever sales transaction is there, you have to check it and post it in sales account. So instead of maintaining one single journal book for all transactions, it is better to maintain separate journal books for repetitive transactions like purchases, sales, cash related transactions. Let us see how this concept works. Now, let us imagine that you have gone to a vegetable shop where you have to purchase these three items, let us say beans, lady's finger and green chili. See, they are looking alike. Let's imagine that you only have one cover to keep all these vegetables. You purchased all of this, you kept it in the same cover, you went back home, and by the time you went back home, let us say all these are mixed up. How difficult it is for you to segregate them and prepare the curry related to that particular vegetable. Instead of this, what you can do? You can maintain a separate cover for each vegetable. So if you carry a separate cover for each vegetable and pack them in a separate cover, when you go back home, they are already segregated, so you can use them for that particular purpose. Now, in this example, packing all of this in one single cover is exactly like maintaining one single journal for all the transactions. All transactions kept in one single journal. All vegetables kept in one single cover. What happens because of that? It will be difficult to segregate those transactions and post them in the ledger account. It will be a difficult task. Instead of that, packing them in separate covers is like maintaining separate journals, which are known as subsidiary books for different type of similar transactions, which means beans, all of them, they look alike, so keep a separate cover for that. Lady's finger, they all look alike, that is one single vegetable, so keep a separate cover for that. Green chili, another vegetable type, keep a separate cover for that. So all purchase related transactions, keep a separate book for it. All sales related transactions, keep a separate book for it. All cash related transactions, keep a separate book for it. Like that, we have few other also. I'm just taking an example here. So keeping a separate book for that particular type of transaction. All such transactions get accumulated. So all purchase related transactions, that total, it is easy to take it and post it in purchase account. All sales transactions related, sales total, it is easy to collect that and post it in sales account. So this will facilitate in analysis and easy work. Now, let us see what all subsidiary books we have. We can have special journals for all repeated regular type of transactions. For example, generally the repetitive transactions related to a business may be cash related transactions, purchase related transactions may be there, sales regularly happening, purchase returns. When purchase are there, automatically purchase returns also can be there. When sales happen, sales returns also can be there, and bills receivable and bills payable. These are the generally repetitive, regularly happening transactions. So because these are repetitive, regularly happening, we can keep a separate book for that. For all cash related transactions, recorded in cash book. For all purchase related transactions, we can record in purchase book. For all sales related transactions, we can record that in sales book. There is a note related to purchase and sales book that is highlighted. I'll discuss that little later. To record all purchase returns book is there. To record sales returns, sales return book. To record all bills receivable transactions, bills receivable. To record bills payable related transactions, bills payable book you have. See, apart from these special journal books, which we call them as subsidiary books, you anyway have one regular journal where you can record transactions. That is anyway there. But apart from that, for convenience, you are maintaining separate books. So when you have a regular journal book, which you can call it as journal proper or general journal, what all can you record there? This is anyway used to record anything that cannot be recorded in special journals above or subsidiary books above. There may be some transactions where you may not be recording in any of this. So automatically you can record them in your regular journal that you have. Here, the note for purchase and sales book is you should be recording purchase of goods only that are purchased for credit. These are the highlighted words you see. Purchase book is going to record transactions of goods purchased on credit. Similarly, sales book is for sale of goods for credit, sold on credit. Why? See, for example, if goods are purchased for cash, anyway we have cash book, we'll record there. If some sales of goods have happened for cash, you have anyway cash book, you'll record there. You should not record twice, right? So cash book is anyway there. That is why goods purchased on credit or sold on credit will be there in these books. Here the word goods is also important and credit is also important. If you purchased an asset for credit, can I write it in purchase book? No. It has to be goods that too purchased for credit. Sales also. I sold an asset for credit. Can I write it in sales book? No. Sale has to be of goods for credit. Then only you can write in sales book. So let us look at the advantages of having subsidiary books. The advantages of having subsidiary books are: 1. Division of work. 2. Specialization and efficiency. 3. Saving of the time. 4. Availability of information. 5. Facility in checking. What is meant by each of them? Division of work. Now, we have maintained a separate book for each type of transaction. Purchase book for all purchase of goods for credit. Sales book for sale of goods for credit. Now we can give purchase related transactions to one accountant to look after. Sales related transactions, another accountant might be looking after. We can divide the work. Somebody else has to take care of the cash book, cash related transactions. Now, division of work is possible because we divided the entire set of transactions into different categories. Now we can engage different people to do specific type of work. Purchase, one person must be doing. Sales, another person must be doing. Cash related transactions, another person might be taking care of that. So division of work is possible. Second, specialization and efficiency. See, because we divided the work, we have engaged different people for different type of work. Now they will get specialized. Somebody will become specialized in taking care of the purchase related transactions, and they will develop efficiency in that. Same is the case with if sales, somebody else is engaged for sales, they will develop an efficiency for that and they will become specialized. So because we could divide the work, that will lead to specialization and efficiency. Third, saving of time. Because we have divided the work, all the works can happen simultaneously. Because separate people can be engaged, the work can happen simultaneously. That saves time. Availability of information. If you want the credit purchase total, we can get it from purchase book. If you want the credit sales total, we can get it from sales book. So availability of information will be instant and easy when we have a separate books for that. So facility in checking, fifth point. Now that we have divided the work, if there is any fraud that is being committed, that can also be identified easily. It happened in which transaction? If it is a purchase related, maybe we'll check the purchase book. If it happened in sales related transaction, maybe we'll check the sales book. If you have only single journal, if the fraud has happened related to purchase, you have to go through entire journal because everything is there at one place instead of having separate books. So that is the disadvantage if you have a single book. Now that you have separate books, if there is an issue with a particular type of transaction, you can go to that specific book and identify. Identifying will be easy. These are the set of advantages of maintaining separate special journals, which are known as subsidiary books. So hope you understood the concept and advantages of maintaining subsidiary books.